What's up, everyone? I hope everybody's having a wonderful day. Um, if you guys are tuning in here, it's because I'm starting a series, and in this series, I'm trying to show you guys how to read the market. So in this case, we're basically just seeing a chart. When I started trading, I was using Robinhood, and I never saw a chart or anything such as these candles that you see here, right? So I never knew what platform to use, how to chart was the reason why there's the market's moving up or down. Okay, so there's a lot of things that obviously you guys are probably confused if you guys are watching this. I'm gonna start a little series where maybe it'll take 10 to 15 videos, but I'm gonna take it in little portions where I'm gonna show you and try to teach you as much as I can in like 10 to 15 minutes per video, um, to how to I analyze the market and how I'm able to actually know where sellers and there's buyers, if the market's gonna go up or down, is it gonna keep going up? You get me? Like all this stuff you see online, just super basic. Uh, I don't know how fast I could do this, but I'm gonna try to make it as simple as I can. And yeah, hopefully I help you guys out to starting your journey and get better at this. So basically, it's just a chart. The software that I'm using is called TradingView. It's a free software that you could use to chart. Obviously, you have other platforms like brokers. They have their own charting platform also. But this is what I use. It's super easy, super simple. Also, it's a free trial. There's free everything's free too. There's free trials to it. You can pay monthly, weekly. It's up to you guys. Okay, so this is basically a chart. I'm pretty sure you guys have never seen this. Well, this is a first time look of a chart. So I'm just gonna go over what are these lines. Basically, this is just an example of what you're gonna learn today, or just basically just learn what this means, right? So just by looking at straight at the eye, we see lines, right? How it's just there's numbers here. All these numbers are just basically the price of the stock, right? In this case, this is Tesla. All right, this is the Tesla. Then we have right up here it says 4H, which is 4 hour. These are intervals of the market. I have for myself, I have the W, which is 1 week. Every time I click on it, it's gonna show you a week. If you notice, the candles got smaller, and this is basically every week. The daily is gonna make more because it takes 5 days to make 1 week. So five of these is gonna equal to 1 week, and then we go smaller. So the time frames is basically us to go deeper inside into the market to see what's gonna happen to the next move. To move, the best time frames to use are the bigger time frames, which I'm gonna talk about that sooner. I'm gonna talk about that in a bit, actually, not sooner. So let's see this. The daily, the 4 hour, we got the 4 hour also. It gets even smaller, 1 hour, 15 minute. And the lower you go, the more candles you will see, the more price movement, the more obviously you get deeper into this. You start seeing the 90 cents by cents instead of just by hundreds of dollars. And that's basically the market. You want to know and realize how we're going to move and where we're going to start. So let's get this class started. Little session. It's not really a class, just a session. I'm gonna try to do 10-minute videos, 10 to 15-minute videos, and fast explanations. Just get straight to the point. Okay. So the first thing that I use, that everybody uses in the market, is called technical analysis. Okay. So let's see. Technical analysis is a method of evaluating securities by analyzing statistics generated by market activity, past prices, volume, and do not accept the measure the intrinsic value. Don't really mind that. This is just to I'm reading it as what I used to teach in the class. I'm just trying to show you guys what the market is made out of, right? It's basically made out of market activity, how it's moving up or down, past prices, the basically the prices how it used to cost before till now, and what it could be in the future, and volume, which is basically showing you if there's a volume, it's just how many trades are in one ticker stock. Okay, so you could look for patterns and everything else. I'm pretty sure you guys have heard of this, patterns and indicators. But you could also you could use those to determine the prices are going to move up or down, and that's in the further classes. I'm going to talk about that too. And yeah, basically that's what the market is. It's past prices and the market activity from the previous times. Okay, so what is technical analysis? basically is technicians believe that securities move in very predictable trends and patterns. You guys could look this up on the internet right now if you guys want to. Look up trends. There's patterns. I'm pretty sure you guys have seen it already. If you guys are watching this video, talk about the patterns. There's like all these triangles. They have names for it, and they actually gives you a move. Okay, trends also. Trends, which is bullish is going up, bearish is going down. So trends continue until something happens to change the trend. Until that change takes place, price levels are predictable. That's how you're able to analyze the market. Okay, so what is the history and background of technical analysis? Technical analysis, perhaps the oldest form of security analysis. It is believed that the first technical analysis occurred in 17th century Japan, where analysts used charts to plot prices changes in rice. That was way back then. Okay, so how we were mentioning in the first slide of the past prices, market activity, and volume. So we use past prices to take action. It's basically like right now where we're in the 4-hour time frame. You guys can see on the left, top left corner, is past prices. So we go back, we see the chart, right? We're able to zoom out. We see all these prices here. This is Tesla. It'll show you when Tesla started back then, back from July 2017. Just keep going any further until it actually, so far, 50 cents, 20 cents, 20 bucks, $30, $40, right? So even back then, if we start charting from back then, you start noticing the possible prices that's gonna do. Okay, so I'm just gonna show you the basic by the eye. The whole market is just right now, so I won't get into detail. You just want to be able to see where it stops. There's always a stoppage like this. So let's just say there's an area where the market, it's gonna go up. So I'm gonna try to make it where this goes like this, and then it drops and it stops. Obviously you can't see it here because you have to draw it or do a line around it. So you can notice what happened there, right? It stopped right there, right? So in that area, if you notice the price, $6.52, that's exactly where there's sellers. How do we know we're sellers? It's just by the obvious. Look at how it drops down. It goes back down, right? So you know that at $6.51, they're selling. They're not interested in buying the stock. Obviously, if you're a buyer and a seller, they actually, this goes with real life also. The same way when you see prices and holidays, oil is on special, you go and you buy it because you know it's cheaper than other times. So now this time you're just watching it in a chart. That's all it is. You're basically reading it from the far distance where you're able to see instead of waiting for the day to come. And this day, and right here in the chart, you're able to see what's going on. Does it go up? Does it go down? You know there's sellers around this area because just by looking at this, right, it dropped down. Obviously, you could go to see where buyers. That's gonna be a little more harder to learn, but just where you can see where buyers are standing, just to make it simple again, is exactly here because this is where it started going up. I'm only looking at this section there, okay? So because of this, you notice there's some buyers here. So around there, they're gonna try to buy it again and bring it up. So what you're trying to do is obviously learn candlestick patterns, and you could go ahead and watch those videos. I have videos on my YouTube, and there's other YouTubers that have it, that talk about candlestick patterns. If not, click on the link down below, and you'll be able to see the video that I have. Okay, so I talk about candlesticks, how they work, how they use, and supporting resistance if you want to go ahead. But in this case, I'm just showing you guys where they're stopping and their sellers are there. But I fast forward, obviously you're going to be able to see what happens. If the price goes above this value that we saw, $6.50, $6.50, it's going to try to go higher. Okay, it's going to try to go higher because now they're interested on buying that for some sort of reason, right? You got to look at the news for that. And Tesla will go higher. So that's all the market is made of. The candles, you got to know how to read candles. Fast forward, it goes a little above higher and higher and higher. You start seeing movements like that. So let's fast forward a little bit longer, and you start seeing how this area starts, if you put it ahead, they never let it go below those $6.50. The reason why, because those sellers now became buyers. The the past price became the future price, which is now holding. So now you know that it'll go a little more higher to the top. Okay. And that's what it starts doing. You see that? That's the market. The same thing when you saw that it has stopped right here. Remember the same thing we did here? The same price. We put a little box here to know that this is where sellers were coming in. Right? And there you go. See, $7.50. So now it's increasing in price. And obviously you start seeing that it goes down. There's a lot of other stuff. I'm just showing you how it reacts to the same price how it was before. If these were sellers, if I change it red, it becomes buyers. This is called support and resistance. See, you learn something now, even though this is ahead of the future. Well, I'm going to talk about this later, but I have videos for this, and you'll be able to watch them. Okay, so there you go. Support and resistance, and that's how all this works. That's the market. That's basically what I'm trying to show you guys. That past prices will show you what the market is. The time frame that I'm using right now is the 4 hour. So I'm gonna talk about the what time frames to use, the ones that I use for charting. I basically use the 4 hour time frame. Okay, so we have the 4 hour time frame, which is basically the one that I'm having here. You'll be able to find more prices there easier and faster and less of a noise. What I mean by noise is basically if I go to the small, I can't do it here, but I'm gonna have to go back to, because TradingView doesn't allow me to go too far back. If I go to the 5 minute time frame, let me see. Look, actually, let me go back a little bit. If you start seeing where there were sellers, how I posted here, right? This is where they stopped. Remember? And then we saw that there was buyers around this area here. So I have it red because there's sellers and here are buyers. And then we had a little bit more sellers right at the top, right there. And the buyers came in, okay? So now, if I go back to this area, you notice how in the 4 hour, do you see 1, 2, 3, 4, 5 candles? If you go to the daily, look at how it looks. There's 2 candles. If you go to the weekly, there's only 1. So you want to go chart on the bigger time frame to know what's happening inside of that area, that those levels, how they're moving. You use candles, which is called price action, in order for you to follow through if it's gonna keep going higher, if it's gonna drop, or there's buyers and sellers, and so on and so forth. Like go to the 1 hour, you start seeing more closer, 15 minute, 5 minute, 2 minute. You get so close, and that's what it is. You start finding different styles of trading, which I'm pretty sure you guys have heard of: scalpers, swing tradings, and day traders. That's basically the market. So I use the 4 hour, and find levels like this. I'll move this a little bit. Find some levels, chart, look at where there's buyers and sellers, put a little box around it, and that's what the market is. The market is made out of sellers and buyers. Okay, so this video I just wanted to go over what I'm using. What is the market? What is it called that we use? Technical analysis. And obviously we could talk about the time frames, but I'm trying to make this not too detailed, but just super simple for beginners to kind of know what I'm looking for, what a lot of traders are looking for, and what to use. Okay, so now the time frames that I was trying to go through with you guys is the 4 hour. Okay, so the 4 hour is basically one of the main ones that I like looking for price and levels, and ask in the past prices that are going to reject or buy again. Okay, the weekly time frame, obviously you can see even more, and we're going to start charting. This whole session is just about charting. We're going to start doing this in the next 5-10 videos. I'm going to try to do it as minimum as I can, and yeah, hopefully this video helped you out. And on the next video, I'm going to put this one day by day and just go on from there. All right, see you guys. Take care. Hopefully this helped you guys out. And there's more videos on my YouTube channel that are way advanced than this. This is just a series that I'm starting today. My bad, I'm already starting a little bit. There's a series I'm going to start today. So this could follow through. Okay, see you guys. Till next time.